done some, but it really is amazing to me for a middle-aged white guy to get 53,000 views so far in 3 years is pretty phenomenal. So I'm not a credit repair person though, and I'm really not pro credit repair people either. I provide credit reports to the mortgage industry. So when somebody goes to get a mortgage, they need a credit report, and that's what I provide. The reason I say I'm not pro credit repair is because anything that a credit repair person can do, you can all do on your own for free, for no cost. And credit repair people normally charge $1,000, $2,000, $3,000. So I'm looking for some investors for this plan here. We're going to open up a new credit bureau, and it's going to be the low-cost producer because we're going to have all wrong information. So that's a joke. If you read this dog here has come up with this idea, and I just thought it's a funny way to start. When you think about trying to fix things on your own, it can become frustrating if you don't know what to do. So I actually did write a book on credit scoring. I am a certified FICO professional, and like Jeremy said, I've been selling credit reports to the mortgage industry for 22 years. And this is kind of my story. It's an infographic. Have you guys ever seen an infographic before? I'm sure you have. If not, they're fairly easy to make. But I was actually born and raised in Livonia, Michigan. Went to Western, got a degree in finance, got hit by my wife while I was walking down the street. She was from Canada. I started my own credit bureau. In fact, I have the only credit bureau that was ever started out of a Corvette, which is very cool. Started a credit bureau out of my car. About 2 years later, I sold it to Kroll Factual Data, which happens to be the largest company that offers credit reports to mortgage companies and banks. And I worked there for 11 years. Then I wrote the book, and to support the book, this was all kind of coming together at the same time. I decided to start this blog, thecreditguy.tv, and it turned out that the blog was a lot more successful than the book. People, for some reason, don't want to read about credit scoring, but they like watching videos. So now I'm up over 50,000. It's actually 53,000 so far. So that's kind of where I'm coming from. I'm not necessarily a normal credit repair person. So just a little bit of history of credit scoring and credit reporting. In the 1890s, this guy called Guy Wolford went to work at a general store, and that shop owner had started a book about how people paid. Well, he finished the book, and he was actually the first guy to sell that information to other shop owners. And that company eventually became Equifax. You can't quite see it, but that was the first time somebody had actually put together a record of payment in this country and sold it. So right now, everybody in this room, your credit report does not exist. Okay? Your credit report only exists when it's accessed. So, you know, your file is not sitting there at the repository by itself with all the data. All the data is stored in tapes, but it's the records from each individual credit reporting company. And then when you order it, it goes through and checks all the data and then pulls your report together. And then it's provided to whoever's accessed the report. And a lot of people think Social Security is the most important thing when you access credit. It is not. The name is the most important thing, followed by the address, date of birth, and date of birth. So when you're going through and getting a judgment for a landlord, so if you've ever had to sue a creditor, or if you've ever had to sue a renter, in order to get that to report, you've got to kind of understand how they gather that information. And how they gather the information is that once a month, they have reporters that go out to each court and they gather that information. Now, if it's a small court out, you know, in the UP, they might only get there once every 3 months. But if it's Detroit, they're getting a CD with all the data on it. So what's important is when you file a judgment, and because judgments are public record, they can't have Social Security numbers on it. Okay? So when you file a judgment, you want to make sure you get the name of the individual, the full name, when you file that judgment. So you want to put their first, middle, full name, and then last name. You want to make sure you get all known previous addresses and the date of birth. So when you're filing this judgment, you want to list all those things when you're going to court. That way you're much more likely to get that to show up on their credit report. So has anybody gone through that process? Has anybody actually had to sue a former renter? Okay. So there's a judgment, right? Hopefully that got to their credit report. If it didn't, and many don't, it's more than likely because the name and the address and date of birth you weren't able to match that up directly. Because again, public record, you're not allowed to have social security numbers in it. Any question about that?
I do have a question. I got a call this morning from an IRA tenant saying she can't find a place to move out. And it's a result of a credit report that took place recently. I just won and got the default judgment a few days ago.
And it reported that quick.
Already she's not able to get a place to move to.
Sure.
This
What city was it?
obstacle on Hazel Park.
Okay. Well, I mean,
It was really fast, and I'm wondering if I can
remove it?
remove it.
No. No, you'd have to go to the court and ask for that to be dismissed.
You have to pay for it.
Right, you've got to pay the court, but if you ask for a dismissal, and then it could be removed, but that's a long process. She might be stuck. Yeah. I mean, that's what you want to happen, right? I mean, if I was suing somebody, I want that to be on the report so that they hopefully will pay you one day.
I've never seen it.
Right, I've never seen it.
I see them all the time.
I don't see my own. But it doesn't, for Farmington Hills,
Well, they would, but see, if they don't have your name and address and date of birth, they're not able to match it up, because that's all they're going with. Are you talking about your personal credit report? Oh, okay. So you put it on their credit report. So you file a judgment and win. Never shows up. Okay, well, that's what I'm trying to coach you on, is make sure you
It's
get...
automatic, though. It happens without our
Yes.
proactive behaviors.
The data is gathered by the repositories and entered. Now, there is a delay. Normally, it doesn't go that quickly. But I've called the repositories, because actually it was here a couple of years ago, and this question came up. So I called my contact at the repository. I said, hey, how do they gather this information? And he told me the whole story of how they gather the information. And that's why name is so important. So if the guy's name is Bob, and it's really Robert, and you put Bob on there, it's never gonna make it. So that's why I wanted to share that information.
Perfect. Dave, when you say the name and address and date of birth don't match, or put down all the addresses, now if I have a tenant who I have to file a complaint for eviction or for monetary judgment, I'm putting down the address,
Right.
my unit address where he's been living, and so he moves on, he's somewhere else now, so that address doesn't match his current name and
Right.
date of birth. What other addresses, or how do you put more than one address on?
Well, you can
How do
put
do it?
previous addresses. That might help.
On a complaint, they want to know where to serve this guy.
Yeah.
What's his address?
Right, and that's correct. The problem is, and very likely what happened there is they've moved to a new place. If you didn't have the name perfect and the date of birth, it won't match up, so it won't appear. You'll still have the judgment. It's just not on the credit report.
But if there is a judgment, if you win the complaint and you have a judgment, that's automatically sooner or later going to show up in records or in reports, right?
I mean, it should if it matches up. It's not perfect science, but they can't use social securities in the judgment process. Are you guys all thrilled with that answer? I'm sorry. I didn't invent the system. I'm just explaining it.
You just work here.
Right. All right. So, have you guys ever heard of disparate impact? You ever heard of that term before? Have you ever heard of the CFPB? The big government protection bureau that's been created by Obama during a recess appointment of Congress that now is dictating all of lending is under their guidance. And one of the things that they're in charge of enforcing is disparate impact. And disparate impact is if you pull a credit report Well, let's do it, because mostly it's been for criminal background check. So if you pull a criminal background check and you know that even though pulling that criminal background check is not discriminatory, but if a certain ethnic group is more likely to have something on their credit report or on their criminal background check than another one, then that's disparate impact, and you're not allowed to check the criminal background when you go to rent or lend. Does that make sense?
No,
Absolutely not. I understand what you're saying, but it makes no
What you
sense
said
at
makes
all.
sense.
Read that right there.
But if you follow the same process for everybody, regardless of their ethnic group,
Right.
aren't you protected to some extent?
Well, you would think, except for if you know that a specific ethnic group is more likely to have a criminal background, when you pull a criminal background check, pulling the check is not.
So does that particular group include gang members, or?
Well, whatever ethnic group you choose to identify.
So if Greeks are more likely to have been
Yes.
criminals, then you pulling a background check and saying, I'm not going to rent you because you're a Greek criminal.
Yes.
Oh my goodness.
So the only one you could not pull a background check on is the top one. And everybody else that has more of a tendency, it would be against the rules.
Well, no. I mean, you're not allowed to pull it. You're in violation of the disparate impact rule that the CFB is enforcing. Now, have faith, it's not all the way here yet. There's been a few lawsuits in California over this. But the reason I bring this up is that it is coming to credit reporting as well. So if you know that one type of group has a lower score, then you're not allowed to pull the credit report.
How do they know that? Or is it supposed to be years old?
If you don't want to know, don't look. If you don't want to know, don't look at the next slide.
Is that like relative to car loans or
Don't look.
any purpose?
This was a study done in 2007 by the government. Okay, and this is the mean trans risk score by demographic group. And if you could see this right here, this would be age. So the older people get, the higher their score goes up. This is by marital status. If a man who's married has more, or actually a better credit score than someone who's unmarried. And this is male and this is female. And here, females actually have slightly higher scores on average than men. Now this right here is the part you don't want to look at. Asians have the highest score. Followed by non-Hispanic white. Apparently I cannot just be white. I have to be a non-Hispanic white. But that's my group, the Irish people. So, and then followed by Hispanics, or the non-white Hispanics, and then African American, which they did not even list African American, they said the other word. But that's, disparate impact in action right there.
So who does that protect?
The consumer, of course,
Nobody.
right? It protects the Consumer Financial Protection Bureau.
Credit reports on Asians?
Right.
Yes.
Right.
What if you don't know? What if you haven't met them? Most of the time, I've just got a name.
You can't ask.
I've just got a name. I don't see my party.
Well, and I bring this up to kind of demonstrate the hypocrisy of this whole idea, okay? And I know it's foolish, but I just want you guys to know what's coming, okay? So what you should do is have in your policies and procedures for renting how you're going to handle this. Because if you ever do get called on it, you'll find out. And you guys are fine. I mean, they're going after the big lenders first. That's who they're going to go after.
They punish them so badly when they do things wrong.
Yeah.
Because they,
Like when they buy Countrywide, right? Now they sue Bank of America.
because they're at such risk of having criminal charges.
Right. So how to avoid being sued from an unauthorized credit access. So right now, the credit repair companies are out there offering free credit repair. In fact, they'll pay you to do your credit repair. And here's what they do. Per the FACT Act, you are entitled to the greater of damages of $1,000 or more. Okay, and what they say is chances are excellent that you will net more than $1,000. So what they do is they dispute every inquiry, every trade line. If you can't verify it, then the lawsuit's brought in court, and then $1,000 request is made to everybody in the process. And because it'd be a lot cheaper to pay $1,000 than dispute the actual lawsuit, people pay. So that's what's going on now. So how do you keep yourself out of it? Right? First of all, you're probably not pulling credit reports anymore anyway. But if you were, you'd want to make sure that you have a form where they acknowledge that they're giving you permission to pull credit. You're getting mother's maiden name or some sort of personal information. They're signing it before you're pulling credit reports or criminal background checks, if you're still feeling like you need to do that. Okay? Now you guys all look so happy now. No?
Well, you're coming across as if there's an alternate plan B.
The only alternative plan B is to have policies and procedures in your company guidelines. That's what will protect you. So, is that exciting? So here's what you could do. You can actually have them go out and pull their own credit report at annualcreditreport.com. There's no charge for that. And then if you wanted a real FICO score, you could go to myfico.com and enter the data and get a real FICO score rather than a FACO score, which we'll talk about in a second. So
if
you
you
guys
have them pull their credit, you're good?
well, you don't have to worry about being sued later for accessing your credit. So that does take care of that.
So we're still subject to the whole
Disparate impact problem. Right.
Yeah, well, there's
But
also
like I
this-
said, we're still a few years away from that.
Okay.
I just did that for kind of shock value.
That might be good work.
Yeah. Go ahead.
Anybody wants to buy a business with them?
If I have an applicant fill an application, name, date of birth, driver's license, social security number, yada, 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 mother, everybody, and they pay me, and I tell them I'm gonna do a check, and they pay me X amount of dollars, $50, whatever.
Mm-hmm.
Right, so is that?
Yeah, that's fine. But you have to have them sign. I would have them
Oh,
sign.
yeah, they
Okay.
sign. They
Then
sign
you're
for the
fine.
money?
You're fine with the lawsuit that may occur later because you accessed their credit.
I really don't want somebody with good credit. I have to go buy a house. I'm gonna keep them
Right. You want to keep them with that credit. So you're fine. That's how I would handle it. As long as you have some. So his question was, if I have their name and their address and their social and a copy of their driver's license, and have them sign a form that says I approve of you pulling the credit report, then you're fine at this point from the lawsuit perspective of the $1,000 for the Fair Credit Reporting Act. So if you guys have not ever pulled your own credit report, I would recommend going here because it is free. You get one per year at each of the 3 repositories. And it does not impact your credit at all either in a negative fashion from the inquiry. All right, so now we're going to talk more about just credit because that's kind of what I talk about usually. Anyway, FICO is the Fair Isaac company. It's been around since the 1950s. They developed a model, and that's the one that all the banks use right now. There are several different versions of FICO, but everybody right now uses a version called 04. 08 is out. It's been out for a while, and there are some improvements on it, but nobody uses it because Fannie and Freddie don't use it. Okay? So when you think about FICO scores, what they do is they rank the order of risk. So somebody with a 600 FICO score, every other loan will be a bad loan. But at 680, you've got 21 loans that are good and 1 bad one. So if you know anything about the mortgage industry, for a while there, nobody cared what the FICO was. So we were down around 500, 520. People were doing loans then. Most of those weren't bad. And the reason is they ignored the FICO scoring model. So I think that's what really was a cause of the implosion. Any questions about that?
Yes.
So the type of credit card that you get, and this is more personal stuff, the type of credit card you get will impact your score. Okay, if you have big box store credit card, you are not going to get the same amount of points that you would get from a bank credit card. So I tell people to go to like too big to fail banks, get a credit card from them, you'll get the most points available. So in order to get the highest FICO score, how many credit cards should you have? 3 to 5. 3 to 5 bank credit cards will give you the highest FICO score. So a secured card is good for somebody if you're trying to help them get better credit and they can't get a regular credit card, they can get a secured credit card, and that's where they put money in the bank, and then they get a credit card with a limit that matches the amount in the account. All right, so here's the Vantage score, the FICO score. The three major repositories, TransUnion, Equifax, and Experian, came together and they saw how much money FICO was making, and they said, well, we're going to have our own credit score. So they created an LLC, and then they came up with this Vantage score. Basically, the range, as you can see, is 501 to 990. Now, the FICO scoring range is 300 to 850. Anything above 640 right now, you can get a conforming loan on. Well, what's interesting is a 700 score on Vantage is a 500 score on FICO. Now, if you go out to annualcreditreport.com or any website other than MyFICO, you get a Vantage score. So now you know why people, when you're a loan officer, people call you up and say, yeah, I pulled my credit report, I just got it at 700 score. I should be good. And then they go to pull it and it comes in at 590. And they're like, what's going on? Well, more than likely it's because they got a Vantage score. Now, why would Vantage come up with a scoring range of 501 to 990 when they know FICO is 300 to 850? Create confusion, right? So they're trying to chip away at the lock that FICO has on credit scores. Any questions on scoring models? There are different versions of FICO, like I said earlier. There are some FICOs for auto loans. There are older versions of FICO, and there's the 08 model.
How do you know what you're getting?
Well, you don't. No, I mean, it should say what model it is. So when you pull your credit report from Annual Credit Report and you ask for the score and you pay for that, it's going to say in real fine print what it is. You just got to look for it. So what's the number one question over the last 20 years that I've gotten is, can accounts be removed on the basis of a divorce decree? And the answer is, unfortunately, no. Because when you applied for credit, you applied jointly, not married. So a joint account could be a married couple or unmarried couple, but until that account is closed, it will always be joint, and your partner will forever be tied with you. And that counts for a mortgage as well. So if anybody's planning on getting a divorce, make sure you close your accounts first, and then try to refinance just in that other person's name. As a precaution. So this is a 2011 Realtor Safety Report. I just threw this in here because, there's a spike in crime against realtors recently. And what's happening is they're going out to empty homes at night sometimes to meet with people, and they're being robbed and, killed. 11 people were killed, and I just left that in there so you guys, if you are meeting people, it's a good idea to do it during the day and be cautious, because there is a spike in crime going on against realtors. And you should probably be careful of something. So the age of the victims, I found this interesting. Over 60 is the largest group. 50 to 60 is the second largest, and then 40 to 55. You'd think it'd be a younger group. And the number of assailants, most of them, 75% of the time, are alone, one-on-one. So, nothing to do with credit scoring. I just want to let you guys know what's going on. But you might want to check these people out a little bit more before you go out and meet them. All right, so the effect of an inquiry. So a lot of your people, when you say, well, I've got to pull your credit report before I let you move into the house, if you still do that, well, I don't want you to affect my credit score. Well, it's actually not as bad as you think. A hard inquiry is when somebody pulls your credit for a loan. A soft inquiry is when somebody pulls their credit to find out what the score is, or what the credit is. Soft inquiries don't count, hard inquiries do. But hard inquiries are now grouped together in a 45-day window. So if you had 10 mortgage inquiries in a 45-day window, that's going to count as one inquiry. And it's going to only bring your score down for one inquiry. If you had 10 credit card inquiries, though, those are going to be 10 actual inquiries. So mortgage, auto, student loans, those are all grouped together. And there is no impact for 30 days. So, and I just kind of broke this out. Mortgage inquiries, auto inquiries are grouped together. So, any questions on inquiries? No, it's more of a mortgage kind of thing anyway. Recently, FICO released some information about damage points. So, if your credit score is going along fine and you're at 680, what would happen if you have a maxed out credit card? Well, you lose 10 to 30 points. But if you're at 780, you lose 25 to 45 points. So the higher you are, the more the negative action affects you. Okay, does that make sense? 30-day late payment, loss of 60 to 80 points, or 110 points if you're starting from a higher point. And this is really important because if you have one 30-day late, it's going to affect you for 4 years. So I always tell people to pay their bills on time. Debt settled for less than full balance, which is a short sale, up to 125 points. Foreclosure 160, and then bankruptcy, which is the worst kind of a situation you can have on a credit report, 240 points. So now you're down almost, well, you're in the 500s for the bankruptcy. You guys ever heard of a fraud alert or a credit freeze? If you become a victim of identity theft, the best thing to do is put a freeze on your credit report. It does cost money. It's permanent. Nobody can pull your credit report unless you unlock it. So it becomes locked down. That's the best thing you can do. It's not really that much money, about $30 per repository, but it's well worth it if you're a victim of identity theft. That's the best thing you can do. Now, a fraud alert is just a statement that you put on your credit report that somebody may have access to your credit, and if somebody accesses your credit, to call you first before they open a new account or grab credit. So that's more of an alert on the report when it's pulled. So, business credit. Does anybody here have a DUNS number?
Yeah.
Okay. You can actually get them for free if you say you're a nonprofit. When you sign up, it's the same as a regular DUNS.
Is that based on the tax return, or is that based on the...
You're gonna lose money for a year?
No. You can get a, yeah, right. If you're an official nonprofit.
501c3.
Right.
Okay.
But it's the same DUNS number that everybody else gets, so I say just go ahead and get a free one. They will call you and try to upgrade you, but I found that the D&B information is becoming less and less important, maybe much less than it was even 10 years ago, just because I think that everybody's really personally signing for anything less than $1 million anyway. You guys find that as well? You guys have a DUNS number, but I think they'll look at it, but if you have bad personal credit, the DUNS number is not really going to matter because you're going to personally sign normally. So this is becoming, it's really a shame because at one point it was like gold to have a DUNS number and a good business credit rating, and now it's kind of fallen down. The company's really been mismanaged for a number of years, and I just don't think they're as important as they used to be. All right, so your medical FICO score. I bet you didn't know you guys all had a medical FICO score. So the medical FICO score will determine what type of treatment you get from the hospital. So if you score high on the medical FICO scores, you might get pills to take. If you score low, you might get a shot because they figure you won't take the pills. And if you score really badly, you get the death panel. Okay? The Obama death panel is what you get. Actually,
Going for a minute.
Actually, I'm kidding on that. But there is a medical FICO score. This is real. It's not part of Obamacare yet, but you know how that goes. So, just an interesting fact. FICO actually has many different predictors of behavior. So if you're, they can read how you've spent your money in the past and predict how you're going to spend it in the future. So they have models that'll predict when you're going to get your next phone, when you're going to get your next car. You know, any purchase that you're going to make, they have models that will predict that given your demographic. So, and those are all for sale to the major banks.
Excuse me, Dave, before you leave that one, what is the significance of your medical FICO score and who uses it?
Well, FICO's come up with a model. The insurance companies have looked at it. I don't think it's widespread yet, but that's what it was for. It was for the
What about
insurance
with
companies.
HIPAA laws and stuff? How does that, if they're delving into your medical background?
They're looking at your. Well, see,
How
if you
you're
look at the
consuming
things,
healthcare.
Your demographics.
it's age, gender, time of residence, auto ownership, time on the job, marital status. So it's not looking at your.
Isn't that discriminatory, like the first slide though?
Disparate,
Disparate
the
impact?
disparate, yeah.
You're right.
It's like there's some conflict
You
of
see,
interest going on.
they're writing so many laws that now they can't. They're conflicting, right? That's where we're at in the country. You know, there's so many laws out there. If you guys were in mortgage lending, you would all hate the CFPB because they have conflicting. Like you cannot be in compliance right now if you're a mortgage lender.
I was, and then you gave the license back because I didn't want it.
Yeah,
It's a government agency, right?
of course.
I hate it anyway.
Yeah, of course. So, well, you know, I know that there are some HIPAA laws that don't allow medical information to go out, but this is not medical. This score is not based on your medical history.
But it's based on how you're consuming healthcare though, right?
No. No.
None of that stuff that says anything about
Okay.
whether you brush your teeth or
It's
not.
profiling.
Yes.
It's profiling.
Right, and there might be a disparate impact.
I'll bet you there is,
Yeah, I
and
bet
I'll
you there
bet you
is.
it probably wouldn't be real hard to figure it out.
Right. Yeah, I agree. Anyway, yeah. I'm not the bearer of good. I mean, I didn't make up the.
Yeah, I know,
the
you're
FICO
just,
score.
happy news today.
Just a messenger.
Yeah. Well, you know, Alan inspired me so much last week. I really wanted to come in here and give you guys an uplifting speech.
You get a motivational guy for next.
Yeah,
Yeah.
not only you don't want a loan, not only you don't want a loan, you don't want that credit either.
Yeah,
Right, you don't want-
yeah, it always
No,
gets
I mean-
darkest right before it goes totally black.
Right. Right. Like the Super Bowl. But I mean, here's the thing. We are actually fortunate to have the credit databases that are out there. Many countries are not allowed or don't have the ability to walk into any store and you can get credit instantly. We are fortunate to have that. Now it's your responsibility to make sure your credit file is correct. It's nobody else's. Even though they collect the data without your permission and they sell it, make a ton of money, it's still your responsibility to, and I'm not saying that's right. I'm just saying it's your responsibility to make sure your credit's correct. And then, go from there. Now, as Jeremy said, if you go out to my website, I've got a ton of videos on there, and anything from student loans, how to correct something on your credit report, how to pull your credit report from annualcreditreport.com. Any question that you can come up with for credit, I think I've covered it, and I cover one a week. So, like I said, I'm not necessarily credit repair, I'm credit education.
It's really good too.
And I don't charge anything. There's no place to pay. You might see a commercial, but I don't think there's a rating system. But there may be some commercials. Okay? So any individual credit questions that I can answer? All right. Go ahead.
So this is, so obviously in the next couple of years they're gonna have to hone in on this disparate thing. What's your
What,
What's your feeling on what the middle ground might be? I don't know if projections are useless, but just I'm curious. What do you think the middle ground?
so
might be?
here's what's going on. We have been lending money to everyone in this country based on a credit report. Now there's a bureau out there saying that might not be legitimate. Well, you then bring down all the banks that now are in the pocket of the Fed, or is there a middle ground? I think they'll find one. I think they'll find one before it gets to credit report. Right now it is pretty far along the road for a criminal background check. So I don't know if you'd want to, I wouldn't pull a criminal background check, but I would search on the internet for that type of information, but I wouldn't necessarily pay for one, because then you kind of register that you pulled one and you pass that line. But they won't let that go through because it would just bring down everything. I mean, everybody's guilty, right? Who's pulled a credit report in that situation. I don't think it's going to get there, but we'll see.
Technical question for you, then. If it's your property manager doing it, it's kind of like a
You're
hitman,
out,
right?
yep.
Your hands are clean.
Yeah. One last thing I want to share with you was not on the slides. If you want to peak your credit score, so let's say you're getting ready for a loan, or you're going to do a deal with something that's going to require you to have a high score. What you do is you pay your revolving balances down to 5 to 9% of the available credit. What that does is you get the maximum amount of points for each trade line. So it works like this. If you're over 100% of the available credit, it's like a collection. It'll hammer your score. But every 9% you go down, it will get better. So if you're at over 100 and you go to 99, that's better. And then 89, that's better. And then 79, 69, 59. Every one is better. You can't get any better than 5 to 9% though. If you go to 0, it costs you credit score points because it looks like you're not using that line of credit. So don't go to 0. Go to 5 to 9%. If you want to peak your score right at the end.
How bad is it to go to 0? What's your relative points? 10
Well,
points?
it's like moving back up to like 29%. So you go 29, and then 18's better, and then 5 to 9's better, and then you go to 0, and then you lose those points that you got by squeezing it the rest of the way.
But if you pay off the balance every month, is that a 0 or?
All right. So from a financial perspective, you want to pay that balance every month. But if you want to peak your credit score at the right time, you only pay it down to 5 to 9%. Because if you go to 0, it looks like you're not using it from the FICO perspective.
So as far as seeing your credit score, what's the best way?
The only place I
know there's my FICO.
My FICO is where I get my credit score every month.
Okay.
Credit Karma has a free service, and they give you a Vantage score, which we talked about earlier. Now the thing, as long as you know what the range equivalence is, then if you go out there and get a Vantage score and you're in between here, well then you're in between here, and so on. So I would say go to Credit Karma if you don't want to spend any money, or go to annual credit, my FICO to get a real FICO. That's it.
Doesn't my FICO let you pull it for free? But then if you want to,
Gotta pay.
gotta pay.
Okay, it's not a non-profit.
I understand.
Yeah.
It's a good one, points too. They give you one.
Yeah, I like it a lot. That's what I use. I'm trying to get a perfect FICO score. I'd be the first person in the country to make it. Somebody got this 848 is the highest that's been reported so far. So I'm about 20 points short, so I'm not quite that close. But that's how I figured out that if you pay below 0, you lose points. Because I paid it like $1,000 lower, figuring I'm going to get even more points for that, right? I lost points. So here's the biggest key if you want a great credit score. You gotta have a long credit history. I'm talking 30 years. Okay, you gotta have one trade at least for 30 years with no late dates, not one. That's how you get up there to the top. then.
I may be 60, but I haven't had credit cards for 60 years.
Yeah.
So, hey, I'm not 100% clear on what you do that's different than the mortgage guy calling TransUnion and pulling a score.
Disparate impact.
You're providing scores, TransUnion provides scores. What's the distinction?
Well, I had a credit company, and my company would buy the information from the 3 major repositories and then offer it to the banks and credit unions and mortgage companies that would then use that to close the loan. The report that I offered was a little more in depth. We would verify all the information. We would make it available to be reissued through Fannie and Freddie. They could call us and talk to someone. That's how we worked in. If you try to work with the repositories, they're very difficult to get a hold of. So we design a report that's easy to read, and that, we're kind of like the middle person. But when you're going through a mortgage transaction, it's very important that a lot of the information is verified. Now, we actually have the ability to correct things at the bureau level, and we can do it in one day. So if there's an error, we can correct it same day, and you can get a new FICO score. Whereas most of the general public can do that on their own for free, but it takes a month to a month and a half. So we have access to things that most people don't have access to. Okay? So that's the exciting world of credit.
I've got evil questions, I'm gonna get it off the board.
Anything else? All good? All right, thank you.
Again.
Thanks for coming out.
I certainly wasn't the only one who had